And still with the central bank, they say that the Nigerian banking industry remains strong despite its recently issued directive for routine transitional guidance to banks navigate post-forbearance adjustments. In a new statement which aims to calm market jitters over the recent directive, the financial market regulator states that the step is part of CBN's broader sequence strategy to implement a recapitalization that was introduced in 2023. In a CBN directive or statement that was released June 13, the regulator had instructed all banks currently under regulatory forbearance to suspend the payment of dividends to shareholders, bonuses to directors and senior executives, and investments in offshore subsidiaries or new foreign ventures. And of course, there's been reactions following this. One of it is from the Association of Securities Dealing Houses of Nigeria, ASHON. They expressed concern over the Central Bank of Nigeria's recent circular, which temporarily suspends dividend payments by banks to offshore beneficiaries. In a statement, ASHON Chairman Sam Onukwe, the association, says that the announcement of this price-sensitive information has caused shock and dismay due to its potential impact on shareholders and the stock market. ASHON, however, reassures investors not to panic over the CBN's directive, as Nigerian banks have strong fundamentals and potential for growth. Well, we're going to stay on this suspension by the central bank with the Chief Executive Officer of Cowry Asset Management Limited, Mr. Johnson Chukwu. Mr. Chukwu, good morning and welcome to the program.
Good morning. Thank you for having me.
So please help us to understand what this is about. So we hear the CBN has suspended on forbearance directive. What's all of this about to the layman? Because we've seen the impact on banking stocks in the last, I think, 2 trading sessions. So what's this about and what are the implications?
Okay, let me take us back a bit of memory lane. In 2020, when COVID hit Nigeria, because we call it COVID-19, but it was actually in 2020 that we felt the impact. As a result of that, economies were shut down, business were shut down, and then it became nearly impossible for creditors, for debtors of banks, those who were owing banks, to continue to service their debt. Central Bank, in its wisdom then, granted forbearance to the banks and said, you don't need to make provision for loans that ordinarily were not being serviced because of COVID. And the Central Bank also knew the economy had gone southwards and allowed banks up to December 2024 to work out those loans. So that's the first part of the forbearance. The second part of the forbearance has to do with exchange rate devaluations. We saw a major exchange rate devaluation in 2023 that made it loans that were below single obligor limit. Single obligor limit is the maximum amount a bank can lend to a single obligor. That loans were previously below those single obligor limits were denominated in foreign currencies. By the time you now reconverted them to Naira at the new exchange rate, which had moved from about 430 Naira to $1 to currently about 1,500, almost 1,600 Naira to $1. The value of those loans ballooned in 2023. And the central bank granted forbearance to the banks and said, look, you do not have to, because it was almost impossible for those banks loans to be paid overnight. And so the central bank said, look, your breach of this single obligor limit will be allowed for some time. That because ordinarily you can't grant more than 20% of total shareholders' funds. So, but because the loans that were previously below the 20% of the shareholders' fund had become above the shareholders' the single obligor limit. So the central bank granted that forbearance and said, look, you don't have to bring down those loans because it wasn't possible to bring down those loans immediately. So those are the two components of the forbearance we are talking of. What the central bank said that the timeline given for the forbearance was December 2024, that timeline had elapsed, and the banks now have to either make provisions for those loans or recover them. That pending when they fully recover those loans or make full provision for them, they shouldn't pay dividend or pay bonus to directors and top management staff or invest in foreign subsidiaries or start new foreign enterprises. So that's what the forbearance is all about, to say, look, you can't continue to pay dividend or pay bonuses if you are unable to recover this loan, because it simply means that those loans have become delinquent if they've not been paid over that time.
So I now see the reason investors are afraid that, I mean, if this suspension is extended, it might actually affect the payments of their dividends, because it seems a lot of profit taking has been happening on major, mostly the fugas in the last few trading sessions.
Yes, if you look at what has happened in the stock market, of course, part of the incentive or motivation for investors that invest in equities, not just banking stocks, is cash dividend. So if you restrict the payment of cash dividend, then it then follows that some people will want to exit their holding because their primary motive was to get cash dividend. And bear in mind that the top banks in the country have been paying very generous dividend in the past 1 or 2 years, in the past few years. They're actually a cash cow. I mean, one of the investors came to my office yesterday, came back from America, said he came back from America 3 days ago, and was looking for me frantically and said, look, what does he need to do? Because he's a retired government official, and said he's living partly on cash dividend. So you can understand the apprehension of investors who felt that any hold or stop on dividend payment will affect their financial position. That's why you saw some exits. But taking it further than that, the benefits that banks generate in terms of value addition that banks generate do not only accrue to shareholders, they also accrue to the government. If you recall, I think in one of your programs, when the federal government introduced the excess tax on income from exchange gains, I was one of those that cried out myself hawks, or cried themselves hawks, to say that the government must look at the two sides of the balance sheet. If you want to tax the banks for making excess gain from exchange naira devaluation, bear in mind that on the other side of their balance sheet are the assets, the loans that would have become the recalcitrant, become difficult to recover. So you do not have to take it from this side and not take look at the other side. But having said that, we are in a situation where the banks have been compelled to pay taxes on those excess gain originating from naira devaluation. At the same time, the central bank has now imposed this restriction for them, which logically, prudentially is right. Prudentially is right. But what I was saying is that the benefits, the costs with the government took, the cost has materialized, and it's only the banks that they want to pass it on to.
So we've seen reaction, obviously, from the banks. They would not be keeping quiet. I think as of this morning, Zenith Bank has shared a statement to reassure customers. They say that they want to clarify that the bank has successfully raised and surpassed the new regulatory capital requirement of 500 billion. And they also note that the bank only, that the forbearance in their own situation applies to only 2 customers, and they have made substantial provision in respect of these facilities. So when we see banks come out like this, do we see an end to this suspension soon? Do we even know how many banks are involved? Because I do not think it's all the banks that are involved.
Well, it will be difficult. I don't have the figures of all the banks are involved, but clearly the big banks will be the most affected because they want a bigger balance sheet. The ones that had the capacity to lend material or large ticket loans, create large ticket loans. But having said that, it's clear to me that Zenith Bank's response is going to be in tandem with the response which is expected from other banks. These banks, these top 6 banks or so, who they call, I think, Fugas, First Bank, First Bank, United Bank for Africa, Guaranteed Trust Bank, Access Bank, and Zenith Bank, which are the biggest, what they call systemically important banks in the country, all have the balance sheet to weather this challenge. But most importantly, I do not even think that it will affect their current shareholder fund, because many of them are making earnings that are sufficient to write off these loans. within a financial year. Take, for instance, a bank like Zenith Bank. If you look at the first quarter report of Zenith Bank, their total gross revenue was about 950 billion naira, billion naira. Net profit before tax, from which loan provisions will be made, was about 350 billion. So if you even take the first quarter performance as a run rate for the next 3 quarters, it seems means that Zenith Bank will make a minimum of 1.7 trillion naira as profit before tax. So it can actually absorb a provision of about 1 trillion naira and still be in a position to pay dividend. And I think that will apply to many of these banks that are affected, because the environment is quite good in terms of profit ability of these banks. Take, for instance, the kind of money they're making from their net interest income. Look at their commissions and fees, which has ballooned as a result of people using multiple service delivery channels that are cost efficient to enjoy banking services being provided by these banks. So I'm not worried. I don't think it will affect their systemic liquidity. I do not think it will affect the bank's financial health. And the central bank actually came out to say, look, the Nigerian banking system is still very strong, very resilient, which are the facts. Most of them have raised shareholders, additional shareholders funds. Zenith said they have made over 500 billion in shareholders funds. Some of these banks have shareholders funds in a region of over 3 trillion naira. So I think the forbearance that the central bank has now suspended or brought to an end and asking the banks to make provisions are not things that are systematically damaging to the banks. The banks are earning sufficient profit before tax to write off or make full provisions. So I think the banks that are quite forward-looking will bite the bullet immediately. I think Zenith Bank in that publication, which they sent to the Nigerian Exchange, said that they will make provision for those 3 loans before the end of June. Today is already June 18th. Simply means they have the reserve to make provision for those loans. And with that we pay dividend going forward, even this financial year.
Yeah, of course, investors are praying that, this suspension is removed shortly and they will be able to pay dividends. Thank you so much, Mr. Johnson Chukwu, Chief Executive Officer of Cowrie Asset Management Limited, for your time and view.
Thank you for having me.